Hey guys, this is Claudia here from the Bookkeeping Expert. I'm back for more education, one more week. Okay, if you missed me last week, I was really sick. Got one of those bad bugs, but you know, I got knocked down, but I get up again, and I'm ready for more, right? Okay, so next week we'll be having some fun and relaxing a little bit after tax season, now that things are going to start to slow down. So hopefully most of you will take some time off, either if you're a business owner or if you are an accountant or a CPA or bookkeeper. Hopefully you'll be able to take some time to refresh, recoup, so you can come back again and hit the road running, because we know it's just a short time that we slow down, and then we are back for more. We're back for more work, right? And this year has been quite busy. All right, very busy. All right, so we're back for more. We want to help you get your books up to date so you can look at any time, anywhere, and be able to know what's your point of reference. So it means where you are. And from there, you'll be able to plan where you want to go. Set goals. No business can grow without solid goals. That's pretty much it. So today we're going to talk about how to enter assets in QuickBooks Online. A question that I get a lot is, hey Claudia, should I add my truck to the business as an asset, or should I just deduct the mileage? And I always say it depends. The intuition usually is, if it's a newer car, just add as an asset and depreciate through the years and add all the expense. Is that always true? No. Sometimes it's actually better to have that newer car just as a tax, the mileage deduction if you drive a lot. So basically the question is, if you drive a lot, you probably want to deduct the mileage. Now, if the car is worth a lot, you're probably going to have a very good depreciation. So it pretty much depends. I would advise to talk to your CPA and verify what is the best way to do it. Now keep in mind that in order to add your car to the books, you will need to add that car to the business. So the car has to belong to the business. It's a business asset. So if you sell the car, you're gonna remove it from the assets from the business. And if there's a gain or loss, you have to adjust that and so on and so forth. But let's suppose that you decided, okay, I'm just going to add my car as an asset. And then let's suppose that there is a loan on that. How do you do that? And of course, at the end of the year, you have accumulated depreciation. So we're going to show you how to add that information in QuickBooks Online. And without much further ado, here we go. All right, here is QuickBooks. Now I wanted to show you, this is a chart of accounts. And by the way, as many of you know, I like to use the accountant view. And to control that, you click on the gear menu on the top right hand side and switch back and forth, right? So that's business view. I don't like business view. I like the accountant view. It's more efficient. All right, so I scroll down here on my chart of accounts, and here it shows the truck, the depreciation, and the original cost. That's what I want. And there's one more account, which is the depreciation expense. Or here, instead of depreciation, I would call it accumulated depreciation. Okay, not just depreciation, because depreciation usually is the expense, all right, which goes into the income statement. Now the asset will go into the balance sheet. And keep in mind that the more assets you have on the balance sheet that has not been depreciated, the better your business may look. Because if you're going to the bank, they're gonna take a look at what's your bottom line, what's your total equity, and what's your liquidity, means that what's your liquidity ratio, which is the assets divided by liabilities. And so if you just have the liability on your books but you don't have the asset, that's not good because it's just going to show that you owe a lot of money but you don't have the asset, or if you have the asset, it's all depreciated. So you got to be careful depreciating your assets as well. So talk to your CPA, and what I would advise is that, not just talk to your CPA at the end of the year, but talk to your CPA beforehand to plan your taxes through the year. Because obviously there is a lot of strategies out there that will maximize your deductions through the year, not just for 1 year, but through the year. So you want to make sure you're very careful with that. But if you see the indentation, so we have the asset here and then the indentation with the depreciation and the original cost of the truck, and that's what we're going to talk. How do I set up that? So the first thing we want to create, we're going to create a new account for the asset. We're going to add the asset. So I'm going to add a new account. Okay, this is the new setup on the chart of accounts for QuickBooks. It's been about maybe a little 6, 7, 8 months, something like that. So it still look a little different for most folks. So the first thing you want to add or select here on top is the type of account. And got to be careful with that, by the way, because if you select the wrong kind of account, then all your numbers will be out of whack. Or like I had clients adding expenses as banks, believe it or not, and I had client adding credit card as banks, so that's not good either. So you want to make sure that you select the right kind of account. So we have an asset, okay. So it is a fixed asset that this is the sub account. This is where it's going to be under it, fixed asset, okay. Okay, so we're going to select a vehicle, and I'm gonna put the name the name of the vehicle. I can put Jeep Grand Cherokee. I think that's how you and then I can put the year 2021 and put a description here, whatever you want. So this is the asset itself, and now I'm gonna create the sub account for that. Okay, so I'm gonna click on new again, and it's actually gonna be an asset account, but it's a counter asset. I'm going to create that accumulated depreciation for that. So now on that account, it's gonna be a sub account of the Jeep Grand Cherokee. So this is where we're gonna make a difference. So it is an asset. You got to select an asset, and the sub account is Jeep Cherokee 2021, because this is gonna be a counter asset. So it's gonna take away from the asset, and I'm going to call it accumulated depreciation. Okay, and I can put a description, and I'm gonna save this, and then I can create the account for the original cost of the asset, right? So I'm gonna put it under the see, it's gonna there's a little indentation here. That means it's a sub account. So I'm gonna put another sub account for that Grand Cherokee. Didn't take it. Okay, there you go. And I am going to call Grand Cherokee original cost. Okay, now with sub account, if I can type, that is, okay, original cost, still recouping from last week, I guess. Now I'm feeling much better, but anyhow, this is how you do it. So you have, we're gonna go there, we're gonna have the main account, and whatever happened on those two sub accounts will show up on the main account, which is the Jeep Grand Cherokee. So you can actually put Jeep Grand Cherokee balance or whatever it is, because that's going to be the balance. Now we're going to enter the value of those transactions, right? So I always like to duplicate my page. So if you bring your mouse all the way to the top, right click on it, and you can duplicate it, and I can have this page over here while I'm working doing something else over here. Okay, so I'm going to create a journal entry. Oh, there you go. Okay, so this is a sample account. Sometimes there's bugs in here. So I'm gonna put, let's suppose that I purchased this, okay, 1st of May, and I'm going to put the value that I paid on the Grand Cherokee. Now I'm gonna put original cost, okay? And I'm gonna debit it because that's an asset account. I want to grow that account. So let's suppose my total cost with, you know, closing costs and everything, whatever, cost $26,000. All right, I'm just wishing for you know, a good deal. How about that? All the used cars are so expensive right now. So that's wishful thinking here, right? $26,000. But here I have a loan, okay? And I'm going to create that loan. I didn't create on the other account, but I'm going to create here. It's not the same. It's not going to be a sub account of the Grand Cherokee because it is a loan. So we're going to see that this is the same thing as creating on that chart of accounts. The first thing I gotta make sure is that I select the right kind of account. And now this is gonna be a long-term liability because that's the loan for the car. Okay, so we can put it as notes payable. That's fine. Okay, and then I'm gonna call Jeep Grand Cherokee. My word. Loan. Car loan. Okay, it's not a sub account because it's not going to deduct anything from the price of the car. So this is going to be an account by itself and it's a liability. So we're just gonna save and close here, and it's not for $26,000. Let's suppose I gave a $3,000 down payment, so the loan is for $23,000. And here I have I pay the rest with cash. Let's suppose I have, you know, cash on hand. I don't have cash on hand. I can take it out of the checking account. Let's say I paid with a checking account, so that's fine. Okay, so that's now when you do a journal entry, you want to make sure that everything is balanced, the debits and credits add up the same. Okay, so very important here. So we have I'm debiting the asset because I'm adding the asset to the account, and I'm crediting the loan because it's a liability. To grow the liability, I'm going to credit it. And also I'm going to credit the checking account because I took $3,000 to pay for the car, right, as a down payment. And I can put a description, down payment, whatever you want to do. And when I enter this $3,000, I want to make sure that I match that amount in banking, so I don't duplicate. I don't take more money than what I actually took. So we're gonna save and close here. And if we go back, see, this is the chart of accounts. If you just type Jeep Grand Cherokee loan, so you're gonna see the $23,000 notes payable. You also see the value of the car. Now if I go down here on the Jeep Grand Cherokee, remember, whatever happened in these two sub accounts will show up on the main account. Remember, I didn't put anything on the Jeep Grand Cherokee, but because those two are sub account, whatever I do here will show up here as a sum. So let's suppose at the end of the year, I want to record a depreciation on the car. So let's suppose this car it's less, we're calculating, 10 years, and let's say 5 years. So that's $5,200 per month of deduction. So how do I do that journal entry at the end of the year? So that's the end of the year for depreciation, and your accountant will give you the numbers. If you are the CPA, you gotta calculate depending on your state and the laws for deductions and so on and so forth. So, there's at times in your state or at times you may have accelerated depreciation that you can take advantage of, and sometimes you don't want to take advantage of. But anyhow, all that to be considered. But that's the calculation itself. It's got to be done by a CPA or an accountant. And we're going to enter here. All right, so let's suppose, I don't know, that's December, but we'll depreciate this. Let's suppose that a year went by, so not really, but you want to mark it as the end of the year, but because it just purchased, it's not. We're just gonna put the date, yes, today or to May 1st, but keep in mind, we'll change it to May 5th. There you go. But let's suppose that a year has passed. We're just make believe here. So the first thing I want to do is remember that accumulated depreciation account. Yes, so we are going to deduct that, and we're also going to deduct the original cost of the car. So we're gonna credit that Jeep Grand Cherokee over here for, let's say, $5,200, and we're gonna debit. We're gonna debit the accumulated depreciation. Okay. For $5,200. So what's that gonna do here is just gonna take. It's going to take that from the total amount of the car. Okay. I'm sorry. We're going to do the depreciation expense here. Oh, so accumulated. I'm sorry. Okay, that's been accumulated depreciation, and then depreciation expense. I'm sorry. Okay. All right, depreciation expense, not the asset account. You want to make sure you debit the depreciation expense, and you credit the Grand Cherokee accumulated depreciation. So basically, I'm taking out of that value of the car from the books, and I am accounting for the expense of depreciation. So you want to make sure that you debit the depreciation expense. Okay, so accumulated depreciation is just to remove, is a counter asset account, so it's going to remove the value from the car. Eventually that car, as it depreciates through the year, is going to be worth 0 on the books, right? 0. And then it's going to be expensed in the income statement at the end of each year. So we're going to go ahead and save and close here, and we're going to take a look at that account, so you see how it looks. Okay, so you see the two sub accounts. So I credit the accumulated depreciation, which is a counter asset account, and it's going to take away from the total value of the car. Now the car is value in the books doesn't mean that's what the car is worth, guys. It has nothing to do with what the car, how much the car is worth. This is just showing in your books how much the car has depreciated, and this is the book value. Okay, book value, not the cost of the car after the depreciation. Okay, eventually this book value is 0, and maybe the car is still worth a lot of money, but it's just because it's been fully depreciated in the books, okay? So that's how it shows. Now we're gonna take a look at the balance sheet, and you see how that looks like, how that look like. Okay, so we're gonna click on reports here. Okay, we're gonna wait and wait and wait and wait and wait. Okay. Oh my goodness, this is so slow. Okay, let me click elsewhere. All right. Let me go back here. Okay, so in the balance sheet is going to show my asset as soon as I can have it. Let me type it. See if it's going to show any faster. Oh boy, oh boy, oh boy. Okay. All right. Okay. I guess we're going to skip that. We're going to skip that. QuickBooks. Come on. All right. But on the balance sheet, the Jeep is going to show up as an asset account. And then it's going to show up the accumulated depreciation just as it is here as a counter account, as a deduction. And then the original cost of the truck. Okay, so that top account is going to show you the balance left over. So whatever is the balance, okay? All right, so an accumulated depreciation, it will show as is a sub account as of the Jeep Grand Cherokee. But this one, we're not going to change anything. So this one is just what's going to deduct from the value. So let's try again the reports. If not, all right. If not, we're just going to have to show next week, guys. I'm sorry. We'll look it up on the balance sheet to see how the assets look like on the account. Okay, so if I close this, let me see if that's going to make any difference. Custom report. Come on. Come on. Nope, it's not going to show up. So QuickBooks is, oh, there it is. Yay! I didn't think it was going to happen today. So we're going to, yeah, it's this year to date, so that's good. We're going to ignore everything here on the top because this is not right. Look at this. I have a negative checking account. That means, man, this person is owing money. That's a simple account. Or maybe there's, there's transactions, income that has not been accounted for. Well, anyhow, we're going to ignore that, but we're just going to go to fixed asset. And we don't have the accumulated depreciation here yet. Let me change the date. Let's see. Okay, so the accumulated depreciation should be right under here. So if I click here, okay, it just did not record it correctly. So, all right, so let me verify if we still have. Oh, by the way, if you want to see something that you did recently, you can actually click on the transaction, like say it's a journal entry, and see this counter clock here. You click on the counter clock and it will show up your most recent transaction. Okay, this is not it. So that's it. Oh, okay, it's for the 5th. Okay, so we just have to update the date right here. See that? Yeah, baby. Okay, there you go. Yay! Okay, guys, that's what I wanted you to see. So this is your balance sheet, and this is how your asset will look like. Okay, so we have the main account and the 2 sub accounts that reflects the original cost of the truck minus the accumulated depreciation, and on the bottom line is the book value of the car in the balance sheet. Okay, so important to have all your assets in your balance sheet, like I said, because this number here, the total equity, is going to show or the total liabilities and equity could give you a negative number, and you don't want that, right? You want this to be a positive number, because if it's a negative number, it means that your company is on the red. You owe more than what the company's worth. So this balance sheet is very important to your company, because if you want to go to the bank and have access to funds, you want to make sure that it looks clean, it looks nice, it has your assets, it has your liability, your accounts are reconciled, and you don't have any checking account that is negative, because that means you're on the red, right? You want to show all your income and all your, not income, I'm sorry, all your liabilities and all your assets, all your equity and your balance through the year. Okay. All right. Hopefully this was useful. So this is, folks, let me go back here. All right. So hopefully this was helpful to you. So once again, this is so that you can add all your assets to your book and show the sub accounts to show the balance at the end of the days after depreciation and things like that. Book value. Yeah, we talk about the book value, right? So at the end of the day, you do have to enter the depreciation and book the depreciation expense that will show up actually on the profit and loss. So we show you how it looks on the balance sheet and how it looks on the chart of accounts as well. The little indentation, and then the top account, which is the mom account, the parent account, not mom, the parent account, will have the sum of the original cost minus any depreciation that occur through the years. Okay, so thanks for watching and spending this time with me. I absolutely love this time that we spend together. If you have more questions, if you want more help, like on a one-on-one basis, feel free to contact us. We may not get back to you in the next couple of weeks right away, but you will see the video popping in. I'll make sure you have one. All right, but I'll be relaxing a little bit with my family, so hopefully you'll do the same, and then we'll be back refreshed in about 2 weeks. Yeah. All right, thanks for watching. If you like this video, give us a thumbs up and subscribe to our channel so you can see the most updated information on QuickBooks Online and information that will help you keep your books up to date so you can understand what's going on with your business. Or if you're a bookkeeper, you know how to take care of your clients' books. If you are an accountant, know how to work with QuickBooks Online, right? Which is very important nowadays. All right. Thanks a lot for spending this time with me. And until next time, keep on smiling.